Chinese stocks are having a great day today. Is it the beginning of something bigger? I'm not sure, but I wanted to share some data points that compel me to stay invested in Chinese stocks over the long haul. Principally, it's how fast the economy in China is going to grow compared to the US. I'm also looking at how expensive the US market is. The US market's quite expensive at this time. I wanted to show some data on that topic and compare it. How expensive are Chinese stocks? Over the long haul, I don't think many people will argue that China is expanding. And the pieces or the areas that I want to point out is how they're expanding in some impressive areas. Robotaxi. They have multiple companies that have robotaxi technology and the vehicles ready to go. And China has a cost competitive advantage. So the likes of Waymo, Tesla will have to compete with Chinese competitors internationally. I have no doubt that in the US will protect the domestic providers of robotaxi. But internationally, I think that the Chinese producers are going to do quite well. EVs. EVs are flourishing. Chinese EVs are doing great. And last, the population. Population in Asia is basically 50% of the population on Earth. That's a huge addressable market. So with that in mind, a Asia-based company based in China is going to have a lot of competitive advantages to serve that expanding market. The middle class in Asia continues to expand at a good rate. And as people join the middle class, they want to buy more things. They want to buy things from Alibaba. They want to buy more technology, which is why Apple is so interested in China. They have to have good growth in China in order for their company to continue to expand, which really proves the point I'm making. The market in China is massive, and players in the US want to tap into that massive market. The players in China have advantages that the US companies will have to bridge a gap on. The US economy is larger than China. We're at $29 trillion as an economy here in the US, and China is at 18.5. But the thing to consider is that the growth rate in China is almost double that in the US. The US is going to grow this year at 2.8%, and in China, they're growing at 4.8%. So over time, it's expected that China is going to catch up and the economy will be as big. They have certain advantages in China, lower labor rates. They have a huge population. They have a population that's entering middle class. So those things really will help China continue to grow much faster than the US. The US market at this time is a little expensive. We've had 5 great years of appreciating stocks, and it's resulted in all the stocks having a market cap in the US of $54 trillion. Boy, that's a big, big number. And it really represents almost 200% of our GDP. In China, it seems far less expensive. All the stocks that are based in China are only $12 trillion, and they only represent 65% of their GDP. My conclusion is that Chinese stocks will probably rise to get closer to a valuation comparable to the US. Will it be the same as the US, the same ratio? I don't know. But as long as it continues to go up, maybe to match their GDP level, that's a really nice appreciation, especially if you pick the right companies. When I look at Chinese stocks based on their fundamentals, they certainly look discounted. And that may be the case. We'll see if the market is going to price them closer to their intrinsic value. For now, I'm going to continue to hold Alibaba stock. That's the biggest position that I have. And it's doing okay. It's not doing as well as, let's say, an Amazon or Meta, but it's doing okay. And I'm glad that I've invested in Alibaba. I also own NetEase, JD, and will continue to invest in those companies. I also own an ETF that invests holistically across Chinese stocks. The stocks that are catching my attention are those EV stocks like Li Auto. Boy, their stocks really doing well, and they really stand to make huge gains in the market share for EVs. They just have a really low cost car, and that car is really impressive when you look at the technology. You look at how that car could sell in countries that have lower discretionary income than in the US. Here in the US, you see people spend $100,000 on a car. That's pretty normal. But in other countries, I think they have more of a budget to spend maybe $20,000, And that's where China really can serve those markets. And I think that companies in the EV market are really going to flourish. So having some Chinese stocks in my portfolio, I think give me good diversification outside the US in a market that really has a big future, a high growth future. And although I think there's some undesirables around investing in a socialist run country, I think the country really has learned the lessons that the Soviet Union probably provided communist and socialist governments, which is if you really are closed to capitalism, you're going to fail over the long haul. Communism, from my observation, has failed in the Soviet Union, in Cuba, North Korea. The citizens are just really deprived from the daily necessities that they should have, as well as other things like high education, access to the middle class, just things that we take for granted. I think those countries learned a lesson that you can't do it without the innovation that comes from a capitalistic thinking economy. I think China is aware of that, which is why they continue to let Hong Kong operate. Chinese companies are regular partners with American companies. You look at Apple, all their phones are manufactured in China. You look at our electronics industry, China, automotive industry, a lot of components come from China. So the relationships that US companies have had with Chinese producers, they go back decades. And I think there's a high comfort level there. I don't think the Chinese government is going to ruin a good thing and cut their nose off in spite of their face. Thanks for watching my video. Hope you found it interesting. Good luck investing.